Now, here's 5 new names because I am a slave to our viewers, okay? And as you see on Twitter today, where I managed to, I think, upset every single person. My kind of day. All right, let's start with social capital Hito Sophia, which trades under IPOE. This is a SPAC that's merging with SoFi, the personalized online banking play that's disrupted the entire industry, although technically it's not a bank. Now, I am a big believer in this one. I've had them on many, many times, and that's mostly because sometimes you got to just trust the CEO, and I do. It's Anthony Noto, formerly the COO and CFO of Twitter. And if you go back far enough, he used to be an analyst at Goldman Sachs who helped me bring TheStreet.com public 22 years ago. I've liked Noto from day one. I think he's totally bankable. I think SoFi's got great numbers. They're forecasting 58% revenue growth this year. I intend to go to the stadium next year. I just want to. Thanks to the recent pullback, the stock's now at 19 and change, basically where it was right after the deal was announced. You know what? IPOE, you can buy it right here. Leave room, way down. We're in an erratic market. Second, there's one that I should have been talking about all along, and it's Vertiv. That's the industrial services company that came public via reverse merger with a SPAC set up by Dave Cote. He's the retired CEO of Honeywell. He's another bankable executive. Vertiv sells hardware, software, and all sorts of services to highly specialized customers like data centers, communications, networks, and industrial facilities. They help these customers set everything up and keep everything running. We know business is good because Vertiv just reported a strong quarter this morning. Unfortunately, the stock has mostly escaped the SPAC sell-off. You can put on a small position here, then you hope it comes down. But Vertiv is a real company with real people who are running it and doing a great job. Third new one. All right, we know that the electric vehicle SPACs have been some of the best performers out there. But what if I told you that the second strongest auto-related SPAC stock had nothing to do with EVs? I'm talking about Open Lending, which is a software company that helps financial institutions make auto loans. We've got an incredible bull market in autos, so it makes sense that this one's on fire. Open Lending has terrific numbers, and they report their fourth quarter results in roughly 2 weeks. Without much fanfare, this stock went from $10 when the SPAC deal was announced to $43 last Tuesday, before pulling back to $39 today. Stock is not cheap. But if Open Lending, if it hits the numbers, well, this thing's going to look like a steal. Fourth is called Skills. Spelled wrong, it's got a Z. S-K-I-L-Z. I mean, maybe that's some sort of distinctive thing, you know? Here's a company that allows video game developers to turn mobile games into open esports competitions. I was reluctant to recommend this one because it had an incredible amount of hype. Skills launched into the stratosphere after getting a big endorsement from someone whom I like, and I was having a little fun with today, and Kathy Wood, arguably the best stock picker around. And then it went still higher on a mobile game deal with the NFL. A few weeks ago, this was at 46. Since then, though, there hasn't been that much news, and it's fallen to 33 after briefly dipping to the high 20s yesterday. I think Skills has a great story. I think Kathy Wood's a great stock picker. It falls below 30, pull the trigger. Finally, here's one that we've all been kicking around. I got this incredible staff. We're all looking at these ideas, and this is the one that has really captivated us. It's called App Harvest. This is a company that develops sustainable, large-scale indoor farms. This is the most speculative of the bunch, but it's an intriguing ag tech play. App Harvest, far from cheap, stock down 22% from its highs, looking more enticing. Currently at $33. If it falls to the high 20s, nibble. In the meantime, I'd love to have the CEO, Jonathan Webb, on the show. There, that's what I call an open invitation.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.